we are on homework 14. We are doing the statement of cash flows for Express TP as of December 31st, 2019. Okay, so we are going to start up here with net income. We always start with net income. And I'm going to take net income from my financial statements. And net income for 2019, it says right here, is going to be $588,000. Okay, now I have my non-cash expenses. So I'm going to go over, look here and see what I have for non-cash expenses. And for 2019, it looks like I have depreciation, amortization, and a gain on the sale of equipment. So I'm going to have depreciation, amortization, spelled depreciation correctly, and I have a gain on sale of equipment. Okay, so I'm going to add these back. So I'm going to add back depreciation, which is $55,000, and I'm going to add back amortization, which was $22,000, and I'm going to subtract the gain on the sale of equipment. It's already a negative on the income statement for me, so $20,000. All right, and then change in current assets and liabilities. So let me see again what I have. I have got accounts receivable, inventory, and prepaid expenses. Just going to copy them over because that's going to make my life easy. Of course, you could always just type it in yourself or write it in with a pen or pencil. And then for my current liabilities, those are my current assets, not including cash. My current liabilities, I have accounts payable, interest income, and income taxes payable. Okay, so for our assets, if our assets increased, we subtract, and if they decreased, we add. So we're going to take the 2018 number and subtract the 2019 number. So in this case, we know that our assets decreased, so we would add, and it comes up positive. And we'll do the same thing for inventory. We'll take 2018 minus 2019. And for prepaid expenses, 2018 minus 2019. For the liabilities, we'll do the opposite. If our liabilities increased, we add, and if they decreased, we subtract. So we'll take 2019 for accounts payable minus 2018. So in this case, we know they went down, so we should be subtracting, and that's how it comes out. So we'll take 2019 minus 2018. For interest payable, and for income taxes payable, we will take 2019 minus 2018. Okay, so our cash provided or used in operating activities, we're going to add up from net income, add all the non-cash expenses, and then the changes in current assets and current liabilities. And we know our cash provided by operating activities was 903. Now we need our investing activities. So we'll go to other info. So it says we sold a piece of equipment with the original cost of $120,000, and the equipment had accumulated depreciation of $100,000 and was sold for $40,000 cash. Okay, so the important thing here that we need to know is that we got $40,000 cash. So proceeds from sale of equipment, $40,000. All right, let me see what else. We purchased a piece of equipment for $180,000. So purchase of equipment, 180. Oops. Was it 180? 150. And that's going to be a decrease because we spent cash. Cash went out the door. And then let me see if there's anything else. Nothing else for investing. So the rest will go down in financing. So we're going to go ahead and add up all of our investing activities. And we had a use of cash of 110,000. 110 went out the door. Then we retired bonds for 50,000 cash. That means we paid them off. Remember when we retire bonds, we debit bonds payable, credit cash. So that's going to retirement of bonds, and that's going to be negative 500,000 paid cash. Then we issued 200 shares of $1 par value common stock for 500,000 cash. The only thing we care about for our statement of cash flows is that 500,000 cash. So proceeds from the issuance of stock, and that was 500,000, I think. I'll double check. It was 500,000. And then we paid a cash dividend of 50,000. That's cash going out the door. Remember when we pay our dividend, we debit dividends payable, credit cash. So payment of cash dividend, and that was a decrease of 50,000. I'm going to double check my number. Yep, that's right. All right. So our cash provided or used in financing activities was negative 50,000. We used 50,000. So our increase or decrease in cash, we're going to add cash provided by operating activities, cash used in investing activities, cash used in financing activities. So our net, we have a net increase in cash of 743,000. Our beginning cash balance is 2018's ending cash balance. So last year's ending balance is this year's beginning balance. And our ending cash balance is 2019's cash balance. And to check our number, the change in cash plus the beginning cash balance, and that should equal our ending cash balance, and it does. So we've done a nice job. All right, that wraps up 2019 statement of cash flows.